Hello, everyone. We want Tesla to scale its units up because each one of them now represents the potential for a robo-taxi and a robo-taxi fleet. Well, the price target for our stock, and I think it's just hitting now for 2027 because we do have a 5-year investment time. Horizon is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500 or and Bulkate's now just Morgan on the regulatory side. I actually think regulations are working in Tesla's favor. For I think roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. They've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something so it is looking carefully at Tesla's data. And in and during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving a Tesla vehicle gets into an accident every 3.2 million miles, and that compares to one every 500,000 miles for the average car on the road. We think that the robo-taxi opportunity globally will deliver $8 to $1 trillion in revenue by 2030 and is one of the most important investment opportunities of our lifetimes. But the robo-taxi fleet is really going to be, or the robo-taxi service is going to be from a margin point of view more like an SAS business. And so we think that it's very smart to maximize units because they have so much option value now. And I think one of the reasons for that is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error, and auto autonomous driving is going to take away the human error. We believe when it comes to Tesla's impressive growth, it's not just about observing from the sidelines for Tesla bulls and those with a keen eye for uncovering the next stock market gems. Seeking Alpha is your one-stop shop, offering the latest on Tesla objectives for the Tesla stock price, Tesla innovation, and everything Elon Musk. Clicking on the affiliate links in the description and making a purchase may earn our channel a commission. Well, we just published a report with our again long-term forecast, and the numbers have gone up dramatically, and yet we think it's incredibly undervalued. And the reason for that there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share, as it had in 2018 177% global market share, including China, that it would lose as the Tesla killers came into the market. And in battery technology, they're not writing down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months to 2 years, the price of an electric vehicle, like categories, is going to drop below that for a gas-powered vehicle for the first time, and it will continue to fall because we're riding down the battery cost curve decline. And so the traditional auto manufacturer, if you look at their R&D budgets, or you look at GM's 10% of its R&D, $25 billion, and I'm sorry, given what's going to happen, capital spending for electric should be close to 100 now. I believe that Berlin, Germany, invited Tesla to construct a factory that would span 200 football fields, either for soccer or football, because they know they're in trouble and need to make adjustments. Of course, there are now 3 other in addition to batteries. Tesla offers 3 more benefits. They possess an artificial intelligence chip of their own to start. After reviewing the chip's specifications, our expert James Wang, who spent 8 years at NVIDIA, remarked, "Oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is significant since electric cars are becoming autonomous, which is an AI initiative. The most thorough and precise data will belong to the winner." Finally, Tesla is the only automaker that still provides over-the-air software upgrades to alter performance, and they are first expanding their electric vehicle business. Tesla currently has 14 billion miles of real-world driving data, while their nearest rival Wio has 20 million. We're talking about exponential growth, but that's not the big story for Tesla. The big story is autonomous taxi platforms. We're moving from a hardware-centric low gross margin model, which is 25 to 30%, to a transportation as a service model, where they'll get a piece of every ride taken because they'll own the platform that these fleet operators will be riding on. That's more of an 80% gross margin business. The great thing about focusing on exponential growth and disruptive innovation is that we should be able to grow exponentially if we are correct on these 5 innovation platforms, which we believe each represent multi-trillion-dollar opportunities. Energy storage blockchain for deep learning, the base case. It's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy. So we've been trying to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high. There are 3 sources for the increase in our estimate. Our estimated price target. One is as Tesla killers entered the market last year, we expected Tesla's market share to go down from 177% globally, that includes China, to something lower. Instead, it went up to 18%. Autonomous is a recurring revenue, very high margin, almost software as a service, like opportunity autonomous taxi networks. And what you have baked in the cake from the street primarily are low-margin gross margins, more like auto, 30% range. We actually think gross margins, because of their battery technology, could head for 40% on the EV itself, and then the incremental revenues from autonomous would be in the 80% plus range. And we think that's what people are missing, and in our $7,000 targets of the scenario testing, we assume only a 25% chance that they're going to be up and running with autonomous within 2 to 3 years. So in 5 years again, we don't really operate like that. We're just trying to figure out the cash flows and then discount them. But one of the things that I'd like to focus on is the reason this is going to be such a big upside surprise is because Tesla is riding the convergence of 3 major innovation platforms. Convergence, it's very hard to analyze this in the traditional world, right? We never include subsidies in our models. What we're talking about right now is Tesla is ready for prime time as an AV and EV and AV manufacturer. But do you know who else shares in today's sponsor, Seeking Alpha, would be Tesla's optimism. In order to locate a PROT, the link in the advertisement directs you to a website with Tesla news. To view the most recent price targets for Tesla's products, click the link in the description. New concepts and everything. Elon Musk estimates that EV sales will reach 37 million units in 2024, which is more than a third of all auto sales. If Tesla maintains its market share, however, I believe the more pertinent statistic is the percentage of EVs. Tesla has 4 barriers to entry, and I believe that more people are starting to appreciate their batteries because they are significantly less expensive than those of other automakers. If these other automakers want to compete, they will have to sell their electric vehicles at a loss or at a higher price. The first is that Tesla will have to sell at a loss because they are losing business from internal combustion engines. The second is their artificial intelligence chip, which I believe they are ignoring a lot of facts about. We have discussed the battery as artificial intelligence chip as miles, which are real-world miles that will feed the AI engine. They have 14 billion miles. Tesla remains the only automaker capable of making over-the-air software changes that alter performance, even though Google has 10 million miles. Therefore, autonomous accounts for 90% of that valuation, and we believe that autonomous's possibilities have increased significantly. For instance, MO is already implementing it and has removed numerous obstacles to Tesla's introduction of the concept.